Hello everyone, George here. Today is 1st of December, just a quick update as promised. Um, as you can clearly see here, so we've got at the moment four uh, short trades, as you remember from the previous video, dated to 23rd of November, and I did certain analysis with regards where the price might end up, certain anticipation. As you can see here, the trading unrealized trading loss at the moment is 1,428 pips, and you can see here equity is almost 49,000 pounds, balance 51,649, and as I mentioned before, my next target will be I will make it 53,000 pounds, which is 6%. So basically, 4 months trading and 6% target. And you will see that in due course we're gonna hit this target. That's for sure. So quick update. Quick analysis. Just a recap. So this is Fibonacci. What do you call it? Extension, and I'm gonna also add a Fibonacci retracement. So just a quick show here. So we anticipate the price to end up in sort of this range, 37, as I mentioned before. Let's add Fibonacci retracement all the way from here to this level of 37. Okay, we're gonna keep it, sort of bring it up all the way here. So what's going to transpire next, that the price will push higher, we'll get to this point, and we're talking about only, let's have a look, like 300 pips, yeah, something like that, 280, 300 pips. From there we should see proper correction, not the necessarily the change of the trend, but correction, because usually during elections in the United States, dollar tends to be or become weaker. So we should see the continuation of the downtrend of the dollar for the next couple of weeks or months. There is another thing at hand. So this is Brexit. I mentioned that before in my previous videos, that it tends to have certain risk to pound dollar. This is more of a geopolitical aspect, not necessarily economical or fundamentally speaking. So here we will see certain retracement. So it's going to continue. So we'll see. We're going to be selling again somewhere in this range, or what might transpire next, price will get to this level 32 and then shoot through to this level of 36 70 36 sorry 37, and we're gonna have after that a proper correction, and this is where we're gonna pocket all our, we're gonna hit all our targets. And as you can see, floating loss of 1,400 pips does nothing to our equity whatsoever. Okay, so with hedging, in due course, we balance the risk. Okay, I mean, with regards to Fibonacci indicator or other indicators, remember, eventually market will um, put these particular indicators to a test. So if you think that there is a but let me put it this way. So indicators you use, the market will always violate them. So it doesn't matter what kind of indicators you're going to use. So I might be mistaken. The price might not end up hitting 37. Basically, we might see a crash in the next couple of hours or days. So that's what I'm saying. The market will always. Oh, there are possibilities. I mean, as you know, if you look back, if you use Elliott waves or Fibonacci retracements, market will violate them, no matter how you look at it. Okay, so indicators will get violated. Okay, just a few updates with regards to what's happening in Britain. So we have had, unfortunately, Debenhams is going bust. Bad news, really bad. Arcadia is going bust. Pets at Home makes 100 minutes SSL. Okay, so here with these two companies, I think cumulative job loss in the range of 35, 40,000 people. Tragic. Okay, let's continue with cryptocurrencies. Um, so let's have a look here. Bitcoin hits new all-time high after a roller coaster week, which saw its price fall. Blah blah blah. Will it finally burst through the 20,000 a coin mark? Coin mark. I like how they call it coin. Okay, let's quickly have a let me just economically explain a couple of things to you. So Bitcoin is a new type of electronic money created by software developer Satoshi Nakamoto in 2009. Now, I think no one really knows who this guy is. I mean, the thing is with this particular currency, well, I mean, no, it's not currency, sorry, it's portrays to be e-money, electronic money. It is fully decentralized. So lots of uh, shady individuals or organizations, they prefer using Bitcoin to transact their dodgy deals. Because you need to ask yourself what's better. Try to sell 10 paintings worth £100,000 or one painting worth £1 million. So you see where I'm going with that? That it's good for certain individuals, institutions to have Bitcoin at higher price as possible. Okay, a little bit of economics here. What is money? Well, it depends who you ask. Economists, believe that money is anything, uh, anything accepted as payment for goods and services. But what is also important when it comes to money that it consists of three parts, or as known as functions of money. Medium of exchange, so you can pay for goods and services. Second, unit of account, which means that money is used to measure the value in the economy. Like we use miles to measure distance. And the last one, store of value. Now, store of value, it means that whenever you get paid, uh, so to speak, the money which you receive from the employer or business, you store it, and no one is forcing you to sell it. Sorry, to buy anything. Uh, if you don't desire it. So, for example, if you get paid, you don't have to go and spend it straight away. Now, with regards to Bitcoin, I'm going to come back to that in a second. Let's talk about bubble or bubbles. Uh, in theory, a bubble occurs if the price of an asset becomes completely disattached or detached from any fundamental value. Still a speculative move as lots of transactions are carried out by criminal enterprise. I'm talking about referring to Bitcoin. So it's like, don't forget tech bubble in the late 90s. Companies didn't really generate any profit, but share prices skyrocketed. So with regards to Bitcoin, um, well, it does work or function as a medium of exchange. But Bitcoin, however, doesn't do well with regard to other two functions which I've mentioned earlier, like functions of money as a unit of account and a store of value. Now, store of value, this is what I was saying, is that because of there is a volatility problem. Okay, so high volatility of the value of the Bitcoin means that it doesn't function well as a store value. It's too risky. I'm sorry, I need to change that. I mean, okay, let's bring this up as well here. I mean, a little bit off topic. I mean, these two twin brothers say that Bitcoin will soar to $500,000. Yeah, yippee. Okay, so going back, yeah, high volatility of the value of the Bitcoin means that it doesn't function well as a store value, too risky. So, for example, let's say today, you know, something is priced in Bitcoins. Let's say, I don't know, a car for 5,000 coins, so to speak. And then due to volatility, it's not now 5,000, but let's say 15,000. So you see, it's like type of hyperinflation, but we can't really use this term here because Bitcoin is not currency. Okay. And also, do you remember Mt. Gox, one of the largest Bitcoin exchanges, had a theft of almost 500 million, you know, dollars worth of Bitcoin in Feb 2014, which led to actually bankruptcy. Um, well, the conclusion is it will not be the money of future. But that being said, the blockchain chain technology behind it is promising. Okay, so you know, hope you guys enjoyed my video. Okay, I'm still learning how to record everything I do and put it out there on the YouTube. And please subscribe. No, I'm joking. As you remember my first videos, I would never do that. It's for smart people. You know what to do. Okay, so going back again to my trading baits here, we anticipate the price to move to this range of 37, and from there we should see a proper correction, which will definitely increase our balance, and then equity will nicely, sweetly will follow it, and we're gonna hit 53,000 pounds within, we'll say, probably 4 to 6 weeks time, maybe earlier. Doesn't matter. It doesn't matter. We are in trading long term. That's what is important. Okay, have a good one. Cheers.